Today is the 12th of June 2012, and what we have here is the US dollar index opening in the Asian market towards the European market at the levels of 81.82 from the reaction of the Spanish banks getting their rescue package of over 125 billion prompted the US dollar to move lower from a closing price of 82.43 from June the 8th closing for the week, and with the current high at 82.72, looks like the market is now in an intraday trading range, taking a pause from that dramatic move, where you could actually see that the bar on this level is within the previous day's bar that showed an acceleration of the US dollar, where it looks like the continuation of a bull trend with a rising channel from the previous is still pretty much intact in spite of that corrective move, which is actually near the 50% retracement from this trading range from the 83 level down to the 81.80, where you would see that there is that particular green line that shows the support at 81 level for the US dollar index at this time. However, if you look at it on a weekly basis, it is more defined to see where the support is, and if we can get the low at 81.78, the previous low of this particular bar is at 81.83. In spite of this bearish candle bar, it is still within that particular major uptrend, where if you look at it on a monthly basis, there is a particular, if we can get this thing here, okay, there is that particular divergence, a selling divergence at that, where it has touched its resistance level at the 83 level, 83.40 level, and this particular selling divergence is keeping the US dollar to continue its rally. As you could see that this particular configuration shows that a stronger rally is actually in the making, because this is only the first leg, and to be able to have a consolidation period over this level, if you look at it, as long as it breaks this particular selling divergence and resistance trend line, however, the possibility for a consolidation now before resuming its rally would still be in the making, simply because you still have 1, 2, and the third lower top, which is the third attempt to break higher from this particular divergence. Going back to the weekly, you could see that this particular resistance level could also be considered as a neckline, where the head, a basin formation on a technical basis, would be considered the head, and a right shoulder moving higher, penetrating a neckline, still above the neckline, and still has the tendency to move higher in the next few weeks. Stochastics and the relative strength index has more room and still on a positive tone, making the trend be more bullish for speculators to buy in on the dollar, especially so with the backdrop of the Eurozone crisis still looming in the air. So there is still that possibility on a stronger tone that a rally could be made. However, on a day-to-day basis, there would be some pullbacks along the way, and a consolidation period here would be more likely to be achieved as long as it doesn't go below the 81.79 or 78 level basis point. As you can see that the similarities between the US dollar index directly more with the dollar Swiss on the daily has that similar effect of an intraday, which is currently working at 0.9613, a good recovery for the dollar Swiss from a low opening at the levels here at 95.07 with a low of 94.79, say 80, which is just about the support. As you could see at the 94.80 level, which recovered alongside with the US dollar index to the high of 96.44 and currently working on an intraday bar at 96.14, a slight correction where a direct movement of the US dollar index would strongly suggest that dollar Swiss would tag along or be pacing the dollar index as it moves higher. And of course, with the opening of the euro higher from the previous, because of that particular rescue package for the banks in Spain, opened at the price level here at 1.2656 with a high at 1.2668 and currently working at the levels here where that particular rally did not have a full support of buyers in the market, that retrieved lower down to 124.49, say 50, and currently working at 1.2488. This is a mirror image of the US dollar index. And transforming it in a weekly, you would see that this two major currencies do have a mirror image of each other. But the most important question is, would the rally on the US dollar index continue and the euro to continue lower as predicted? Well, on this case, we would be totally biased if the market would not move in favor of a dollar rally, which means that both the US dollar Swiss would be moving higher and the euro would be moving lower back to the 124 even level, as some analysts have been predicting that it would be targeting the previous low here at the 2010 levels, where it established a 1.2193 low, which actually tried at the 122.87, which we are looking at right now. The overall view here is this particular head and shoulders formation, where a higher left shoulder with the head and the neckline here has obviously been penetrated, and the length of that particular head would still be the length of the movement, since this is a lower right shoulder here with only a high at 129.73. The tendency here for the prices to move back towards the 1.2917 is merely a correction, and that would be, although that would still be a substantial move, a 500 pip move from the current price right now, working at the 124.97 level. We would not discount the possibility for a corrective move to that price level, and on a weekly basis and as well as a daily basis would have some consolidation to move higher before an actual drop would be made. The pivotal price at 1.2524, say 25 levels here would be a bullish sign for a corrective move, a continuing corrective move for the euro, as the US dollar pauses and the euro going together with that particular consolidation and intraday bar where the market is basically sluggish at this time. That corrective move, however, would generate reaching the 1.2598 to the 127 resistance level, which is within that particular intraday bar, but would be holding that for the week. However, let me remind everyone that there is an existing discrepancy on this particular charting formation, where this would have been a 10-point body with a high at the, let's see if we can get it here, with a high at 123.86, and the bullish formation here on a weekly basis for the euro was a signal of a short-term price reversal, but not necessarily a trend reversal. As you can see here on the other charting system that we do have, the euro is not as bullish as the weekly candle bar formation that you've seen previously, and there is a tail or a wick at the price level of 126.25 and closing at the 125.13. Remember, the 125.13 is the actual closing for that particular day of the 8th and for the week. While here, the closing price, which is supposed to be 1.2513 for the week, closed at 126.40. 43, which is quite a substantial difference between two charting systems. And this is what we would like to emphasize, that due diligence needs to be done, especially so you're trading a volatile market, and what you need to do is to simply compare what is the closing prices from the previous day's trading. We're not here to discredit any of this charting system, but we would like everyone to know that if it would be helpful for us to provide this information, so you would be able to fairly analyze the market, simply not based on what you see, but actually what is the actual price on the chart in itself. So it is good to be able to have two price comparisons and be able to plot your own price page indicator, so you would see that there would be a comparison of three data resources for your due diligence. As most major currencies like the pound or cable had also the discrepancy. However, simply because the market is pretty much calm at this time, taking a contrary position against the US dollar for all intents and purposes of a strategy that would initially be made where looking at that particular divergence on the US dollar with a slight divergence on the buy side, taking a long at the levels here at the 1.5455 level, where the current price right now is at the 155.33 with a high of 155.80. There is still a possibility that the corrective move for the dollar's consolidation and the cable would still be on a higher note, transforming that with the dollar yen, although the 79.55-56 level on the dollar yen here with a high at 79.71 is still not as convincing, although there is a spike formation on both sides of the majors where a corrective move for cable and dollar yen would be in the making. Remember that these are two opposing forces, however, not necessarily meaning that they would be doing the same direction as far as movement is concerned. Presenting both the Aussie dollar and the Kiwi, we are presenting this simply for comparison of the bar formation overall, as this particular configuration would be towards a forming a symmetrical triangle higher, where the Aussie dollar would be on a consolidation period where it has more tendency to move lower, while the New Zealand dollar or the Kiwi would have a tendency to move sideways to higher more, and it has more market potential than the Aussie dollar in itself. And finally, with gold making a three attempts to move lower at the 1,500 per troy ounce price levels, which is basically a very good support, and with a high at this price level at the 116.40.87 is actually the resistance, second resistance level, where it touched and broke lower again at the 1554.79 low here with a tail. And looking at it on a weekly basis, this particular consolidation with a pivotal price, anything above the 1596 or say 1600 level would be a bullish reaction for gold. And looking at it, if that holds true, that particular triangle formation would be, or flag formation would then be bullish for gold, with a slight tendency for a US dollar correction in the longer period term. And that can be seen with a monthly basis, where this particular bar on a monthly is resting on its major support, which is a fourth major support at the low price level of 1544, and anything above 16 even level. First resistance extensions would be at 1638, 1682 for the second. And though the tendency here is to complete this particular formation, where the tendency and configuration it is for the gold prices to move higher. Of course, that is always the case, where otherwise a fundamental report would say otherwise. Thank you very much, and hope that this helps your trading. Have a good day.